Whether you're just starting out in real estate investing or already making strides, the Investor Evolution podcast is tailored for you. Come along as we tackle these questions directly and deliver practical insights to empower your journey in the realm of real estate investing. Hey everyone, welcome back to the Investor Evolution podcast. I'm excited to be here with you this week. This past weekend, I attended a virtual private money lending mastermind with Alexis and Abraham Gray. And I wanted to share with you some of my takeaways from that event and how it relates to private money lenders in three different ways. So both from the borrower's perspective, the lender's perspective, and if there's a connector in the middle, what those roles really should look like. I want to start with the private money lender. So with the private money lender, their roles and responsibilities are to find the deal, vet the deal. Maybe deals are being brought to them, but they need to know what their lend box is, what states they want to lend in, if there's certain timeframes they want to lend for, certain exit strategies that they are willing to lend for. So as a private money lender, before you ever get started, I want you to sit down and think about what it is you want your money to do for you. Now, you might have money in a self-directed IRA, and that money you can't touch anyway for a really long time. So maybe that money, you're okay investing in buy and hold or multifamily stuff that might take 2 to 7 years to exit. You might be perfectly fine with that because that money just needs to kind of sit and accumulate and build on its own, right? But you might have, let's say, a HELOC that you're going to use money from, or some other line of credit, a business line of credit, or maybe you just have some rainy day funds sitting in a savings account earning less than 1%, and you're like, maybe I should do something more with that. Whatever it may be, those funds, you might say, I want it to work for me. So I don't want it to be a long-term lend. Maybe I want it to be less than a year. Maybe I want it to be less than 6 months. Maybe I want it to be 60 days. Whatever that might be, I want you to think of the time frame, where those monies are coming from, how soon you need to pay them back if you're borrowing from a line of credit, or what you really want that money to do for you. For a lot of people, fix and flips could be a great option because usually it's 6 months or less. And if they can turn their money over 2, 3, possibly even 4 times a year and continue to build those funds, right, they're going to do a lot for you in that year. As far as a lender, once you get a deal, whether that's a connector that brought it to you or the borrower came straight to you, there's a couple of things that need to happen. You need to vet the deal, and you also need to vet the borrower. And if you've lent with someone over and over and over again and you have a great rapport, then you're heavily vetting that deal. If you've never worked with this borrower before, yeah, the deal is important, but so is that borrower. And really making sure that you're vetting that borrower is very key to making sure you're secure. Now, if there's a lot of equity in that property and if the borrower doesn't perform, you know you're safe because you have a lot of equity, especially if you're in first position. If you're lending in second position, then it really does depend on that borrower. Now, things that can be helpful for you to vet the borrower. You want to get as much information from them as you possibly can about their prior experience. So I would for sure get on a Zoom or on a phone call with that person to say, hey, tell me a little bit about yourself. Tell me what you've been doing. Now, this person may be super experienced. I flip, 12 houses a year. I have different crews running, whatever that might be. Could be very experienced or they could be brand new. Now, just because they're brand new doesn't mean they're a bad borrower. Maybe they say, I am brand new. However, I am partnering with so-and-so, and he's done, 7 deals in the last year. that's a great place to be because you have the experience of the other guy or gal, and then you can help that new borrower, if the deal's right, get his feet wet or her feet wet in the process and let them start gaining their experience. Now, that is not your job to give them money so that they can get their experience. They do have to have a good deal, right? But getting to know the borrower is really important. Maybe you don't get along with that person. Maybe there's just something that you're like, I don't really vibe with you. Don't lend to them. It's okay. If there's someone that you're like, I totally click with you, like, let's do business together, that's a great feeling, right? But if you have any hesitations, check yourself and figure out why you may have hesitations and work through that before you lend tens of hundreds of thousands of dollars, right? Another important thing, if they say, hey, yeah, I flipped a ton of houses, like I did 12 last year. Awesome. Great. Give me your last 3 HUDs from buying those properties and selling those properties so I can see your track record. You want to make sure they are making money. You want to make sure they are, they can back up what they say they're doing. So if they're like, I can't get you those HUDs. Okay, that's fine. I can't get you that money. No problem. But if they're reputable, if they're able to show you everything, and it's not a bad idea to ask, tell me the last project that you did. What went well? What went wrong? Did you have any issues? Is there a project that you've had that you haven't been able to pay back lenders or that you were late on? Because if they're going to say, actually, we had a deal in Mississippi and there was a cyber attack on the county and I couldn't pay back my lenders for 23 days because the county couldn't close because we couldn't file the paperwork. And so my lenders, I paid them back late, but I paid them back their late fees. Everyone got paid out. And here are the references for those people that they could talk to. Like, this happened to me as a lender, and I was in that situation. My money was late because of a cyber attack. It was crazy. If your borrower is willing to tell you that up front and say, hey, this is the situation, this is what happened, but I was able to pay them back and I was able to pay them the late fee and everything worked out because I made sure there was enough equity in the deal for them that it all worked out. I would make sure you ask for lenders or ask for references. Maybe it's not lenders, but you want to talk to people who know this person so that you can see what type of person are they. Are they integrous? Are they honest? Are they a go-giver? Whatever it may be that you're looking for to make yourself feel like, okay, this is a borrower I can get on board with and lend money to. If they're resistant to giving you that information, then perhaps they're not a borrower that you want to lend to. A lot of people will run credit checks and background checks on people. They ask about, have you had any foreclosures? Have you had any bankruptcies in the past? If we do a background check, what would we find? And if they're upfront and honest and can tell you about some stuff, hey, I did have this bankruptcy because my previous partner didn't file the taxes that I thought they were filing on the business, and they left the business. It was all left to me. I have made arrangements with the IRS to pay it back. Here are the things that I've done to do that. If they can tell you those things up front and they're not bothered by it, they don't seem shady about it, they are not trying to hide anything, then that might be someone that you are comfortable lending with. But definitely talk to references, background checks. Credit checks are important just so you know what their credit looks like and their history, right? History of paying people back is highly important. Now, the next thing you do want to do is vet the deal, of course. So you're going to underwrite that. However you do your underwriting, you look for comps and see what this property could be worth if everything went wrong, right? Like, as is value, if nothing happened, what is they call it the fire sale price. Like, if it had to go to auction, what is that price that would be the rock bottom price that this property would sell for? And then you figure out your equation from there. So a lot of times people will take that rock bottom price. Maybe I'm going to do $100,000 so I can do math quickly. $100,000. Okay, you're going to lend 70% of that. So we're at 70,000. Now, maybe we're going to take off some for fees and interest, just in case there were to be a problem. So maybe you're going to lend 60, 65,000 on that house, maybe a little bit less. Now, if it's someone you've lent with frequently and you know their track record, maybe you're comfortable lending $70,000. Maybe you're comfortable lending 75. You have to find that comfort level. But it's okay to say, like, this is what I'm willing to lend. Here are my terms, and if that's something that they're willing to work with, great. And if not, then that's okay too. There will be another deal. So just because you've looked at a deal doesn't mean it's your deal. Okay. So don't feel like you have to lend on something if you're uncomfortable about it. I was talking with Justin Barber, connecting with him. And one of the things that one of his mentors told him was a deal is always a no until you can't find a reason not to. I think this can be really an important way to go into it so you don't get emotionally invested. For those of us who are kind of emotional buyers, talking to myself here, that when you are looking at a deal, if you're starting to see things that are like, that's just not right. I don't really understand that. If you're having those things pop up, let it go. Let it go. You need to vet the borrower and you need to vet the deal. Now, let's talk about the borrower. So, as a borrower, if you are seeking money from a private money lender and they're asking you questions about your history, what you have done, what liabilities you might have, what your liquidity is, what your skin in the game is, what your past credit history is, bankruptcy history, any lawsuits against you, and that's making you uncomfortable. And you're like, why are they digging into my business? Well, because you're asking them for hundreds of thousands of dollars. And we need to know that you're credible. Okay. So be gracious and answer those questions openly, honestly. If it seems like there's something to hide, that can be difficult for a lender to want to lend to you. As far as being open and honest, we all understand that nothing goes 100% well in a real estate transaction. There's always something along the way. Maybe it's the water heater blew out in the midst of your renovation and you weren't anticipating that cost. Maybe you didn't realize that the foundation had some issues and now we have to worry about that. Maybe it's the market changed and in between your flip and we're maybe looking at a less ARV than we anticipated. Whatever it is, or maybe even before you even close, the title report comes back and there's $200,000 of liens on the house that you are not anticipating. There's always something. When you're asking other people for money, they are really the one in control, right? They're the ones in control. And it is your job to put them at ease, to give them all the information they need to make a decision to lend or not to lend. And if you're not giving them references, if you're not being straightforward with your past, maybe you had a bad deal. Maybe you weren't able to pay lenders back. What did you do to remedy that situation? How did you communicate with that lender when things were hitting the fan, right? That even when things go bad, if you show that you were communicating, that you were doing everything in your power to make the situation right and to make that lender whole, that goes a very long way, okay? And if there isn't a lot of room in your deal for the lenders to feel safe and secure, then just know that that might be a harder ask and you're going to need an investor who is a lot riskier to go in on your deals, which may mean you're going to pay more for that money. And you just need to be okay with that. They may ask you, those lenders may ask you, do you have a W-2? What is your experience? How long have you been doing this? And again, they'll ask for references. They may ask you for your driver's license, and you're like, why do you need my driver's license? Yeah, because they're going to run a credit check on you, and they may do a background check on you. For those of us in the Pace Morby world and have done our safety semester, we all know about Mel Palmer and her vetting system that she does. Now, and if you're doing a lot of deals in this community and you're wanting to show that, hey, look, I am integrous, I've done lots of business, and I want to show you guys that I'm a good borrower, and you go through her vetting service, I think that would go a long way. It does cost money, but if you're doing a lot of deals, and especially within our community, and you can say, yep, Mel Palmer vetted me, here's my background check through her, that's going to go a long way as well. So that might be something to think about as a borrower. Okay, another thing that lenders will probably ask, and I didn't touch on this with the lenders side of things, but they may ask, okay, what's your purchase price? If they're in second lien position, they should be asking who's in front of them. They should be getting contact information for who's in front of them on that lien and how much that first position owes, because that's going to determine how much they can lend because of the amount of equity. Unless you can cross-collateralize, then that's a different conversation. But they may be asking you, like, what's your exit strategy? What's your timeline? What happens if you can't sell in that time? What's your secondary exit strategy? You should have multiple ways that you could exit this property in order to pay your lenders back. So maybe it is selling on the MLS, maybe it's refinancing, maybe it's getting another PML to come in and refinance that first PML out if it's at the 6-month mark or whatever their term is. And you might talk about, like, the contractors I've used this many times. Here's their name and here's some references. Here's other lenders who have worked with that same contractor on deals that I've done. So you're building this case history of, yes, I am a good borrower and I will repay you. That's what the lender wants to know. Are you going to repay them? That's really what they want to know. So those would be things that as a borrower, you should be expected to be asked. And if you volunteer all that information, man, that lender is going to be like, this was easy. Great. I got all I need to know if I want to lend on this deal. Another thing that you may offer is a personal guarantee. And in a second, we'll talk about the documentation that a PML should have with each deal. Now let's talk about connectors. Okay, so there's been lots of things with the connectors going on in the Pace Morby world. And a connector is not someone who just says, hey, Bobby, guess who I know? I know Susie. She has money. You have a deal. You guys should work together. And that's all you do. That's not a connector. That's an introduction. So a connector is someone who gets a deal, perhaps from a borrower, or maybe they've already talked to a lender and know exactly what their buy box is. And so they go out looking for a deal that would fit that buy box. However that deal comes to that connector, could be in either of those ways. As you get that deal in as a connector, you should vet that deal. You need to look at the comps. You need to look at the exit strategy. Is what the borrower asking for reasonable? Is it risky? Is it a first lien position? Is it a second lien position? Are there going to be multiple lenders on there and they may be in third, fourth, fifth position? How is your lender going to be secured? You need to ask all those questions of the borrower also, especially if it's someone that you plan on working with. Again, maybe they have a pipeline of deals and they're looking for lenders and they've come to you and said, hey, do you have a group of lenders who can, come in and partner with me on these deals? Great. You should vet the borrower too. You should ask for all that information. You should get a credit report. You should get a background check, because then you can say, hey, lender, these are the things that I've done. I've looked at the borrower. It's your job to confirm that and reach out to these references that I've talked to also. So make sure you're getting a consistent story. Here's the deal. Here's what I see on this deal. Here's what I think about these exit strategies. Here's any concerns I might have. ultimately, lender, this is up to you to lend on it. I'm not lending on it. It is your decision. I'm happy to talk with you about it, but I'm not going to sway you in any way. I'm just presenting you with the information that I have. Now, the other thing as a connector that you should be doing is you're in this deal with the borrower through the long haul until this gets paid back. As you guys work in this connector space, you should have an agreement with the lender of what you're doing. I am sourcing the deals. I'm vetting the borrower and presenting you with that information so that you can also do your vetting process. I'm looking at the deal for viability and presenting you with that information so that you can do your vetting process and ensure that you are in agreement and make sure there isn't any other information that you need. I will keep you posted as the deal progresses, and we will be in this deal together. So as a connector, you don't want to leave those lenders high and dry, right? You want to be part of the deal with them, in with them, so that they feel comfortable. And if there are issues, if they have questions, you can be that mediator and you can help facilitate communication. It's important for you to know what's going on as well, right? And so when you are working with that borrower, and if anything is awry, what I would tell you is your job is to be that communication. If that borrower is clamming up and the communication is stopping, you need to encourage them to communicate with the lenders. What I've seen is the borrowers who are upfront and honest and say, hey, this is what happened. This is what I'm working on to remedy this situation. I wanted you to be aware. If you guys have any other ideas, let me know. Let's talk about it. Let's think about it and see how we can make this a win-win situation for us. Doesn't that sound so much better than crickets and not knowing that something bad is going on until your money was due 3 days ago, 6 weeks ago, and you're not getting it and you have no idea what's going on? So that's another important thing for everybody in the deal. Everybody needs to be open to communication. And you can set that up in the beginning of how frequent is communication? What are you guys expecting in regards to communication? Is it via email once a month until it's close to closing time on the terms of the deal? And then maybe it's more frequent. Is it phone calls? What does that look like? What do you want as a borrower and a lender for that communication to look like, right? So it's all about getting that information all up front. And then as a lender, there's 5 things that you need when you close, okay? You need a promissory note, which is the terms of the agreement. You need a security deed, could be called a deed of trust or a mortgage, depending on the state. And that is the security for that promissory note. It's what kind of ties that into and puts you in a lien position. Okay, so those 2 things. Then you need a lender's title policy that should be paid for by the borrower. And that lender's title policy protects you in case something comes up on that title after you guys have purchased it that you didn't see beforehand. That lender's title policy will cover it so that you guys are not responsible for it. So that's very important. You also want to make sure you're on the homeowner's insurance as a loss payee. So, for example, if you're doing a fix and flip, you're having to replace the roof, and there was a massive rainstorm, and there was flooding, and it ruined some of the drywall, or if the house burned down, if you're a loss payee on that, you will be reimbursed from that homeowner's insurance policy for what you lent. Okay, so that's important. And then that 5th one is that personal guarantee from the borrower. So those would be the things that this weekend were things that really became crystal clear to me of things I need to be doing both as a PML and as a connector. And who knows, maybe one day I was a borrower, we'll see. But right now, those are the 2 realms that I'm working in. So it was a good reminder also learning experience because I did learn a lot of new things as well this weekend. Alexis and Abraham are fantastic. They are so knowledgeable and so generous with their time, and it was a great event. So I really appreciated them. All right, so that wraps up today and our little recap of private money lenders and borrowers and how we should all be interacting within that transaction. I hope this was helpful. Please reach out with your questions and your comments. Let me know if there's something that I missed or something that I need to clarify, and we will get that to you. All right, guys, have a great one, and we'll see you next time.